Welcome to What the Tech. So, you've probably seen the headlines, right? Everyone's talking about a cooling job market. Well, today we're going to cut right through all that official spin and show you the cracks that are starting to form just beneath the surface of the US economy. All right, so the latest government report on jobs just dropped. And the official story? Oh, the market is just gently cooling off. But here's the thing. As we're about to see, the real picture, it looks a whole lot less like a gentle slowdown and a lot more like a full-on stall. But hey, that's just the headline, isn't it? And here at What the Tech, we don't do headlines. We do the data behind the headlines. So let's really dig into these numbers and see what the official story might be trying to hide. Okay, let's dive right in. First things first. To really get what's happening, we've got to look at the official JOLTS report. Now, that stands for the Job Openings and Labor Turnover Survey. It's basically the government's most detailed look at the real demand for labor out there. So, first up, job openings. They dropped to 7.18 million. And let me tell you, that is a big miss. I mean, way below what all the economists were expecting. And for us, that's the first major warning sign that companies are seriously pumping the brakes on hiring. Okay, next, let's look at the actual number of people getting hired. It went up by a tiny, and I mean tiny, 41,000. Sure, it's not a drop, but wow, is that sluggish. It's barely even moving the needle. And then you flip the coin over, and what do you see? Layoffs. They also ticked up by about $12,000. So let's recap. Fewer openings, basically flat hiring, and more people getting laid off. You can already start to see the pattern here, can't you? So what's the official line on all this? What are they telling us is the reason? Well, the big consensus from the economists is to blame President Trump's tariffs for, chilling investment. And then there's the immigration crackdown, which they say is shrinking the labor pool. They also kind of nod to the Fed holding interest rates steady, and they're whispering about a potential rate cut in September, which is basically them admitting they see the risks too. Okay, so that's the official story. That's what you're going to hear on the nightly news. But it's not the whole picture, not by a long shot. In fact, you have to wonder if it's just a convenient distraction. So let's peel back that layer and see what's really going on underneath. And boom, this right here gets to the absolute heart of it. See, the official narrative wants you to focus on supply problems, tariffs, immigration, not enough workers. But the actual data, it's screaming about a much, much bigger problem on the demand side. This isn't some gentle easing. This is a fundamental loss of economic momentum. So let's talk about this term, demand destruction. This is the key. It's not just a temporary blip, okay? It's a sustained drop in demand for labor. It means companies are looking down the road and they just don't like what they see. They lack confidence. So what do? They stop hiring. They're not struggling to find workers anymore. They're actively cutting back on looking for them. And that is a huge red flag for deeper economic weakness. Right, so for months, all we've heard about is the soft landing, right? This perfect little story where the Fed tames inflation and nobody loses their job. It sounds great, but guess what? When you actually start to look closely, that whole story is starting to show some really serious cracks. And the risk is coming from three core problems that, funny enough, the official story just seems to ignore. Let's break down exactly how this happy soft landing narrative is covering up some much deeper weaknesses. I mean, let's be real here. Blaming things like tariffs and immigration policy, it's just easy. It's a convenient scapegoat, right? It lets policymakers sidestep the much harder, more fundamental problems that are actually bubbling under the surface. And this is a perfect example of how a single number can tell a completely misleading story. I mean, sure, 7.18 million job openings. That sounds pretty good, right? But context is everything. This isn't just a number. It's the lowest that number has been in over 3 years. The trend isn't just down, it's accelerating downwards. So, okay, when you start connecting all these dots, you've got the demand destruction, you've got these structural problems nobody wants to talk about, you've got these accelerating negative trends, what you get is a picture of a much, much more fragile labor market. This isn't some sudden dramatic crash. It's more like a slow bleed deterioration. Just look at this chart for a second. This says it all. Over the last 3 months, we've been adding an average of just 35,000 jobs a month. 35,000. Now compare that to the same time last year, we were adding 123,000. We are moving at less than a third of last year's pace. Folks, that's not a slowdown. That's what you call recession-adjacent territory.
So here's the bottom line, the key takeaway. It is time, officially, to retire the phrase resilient labor market. Just stop saying it. That story is over. It's outdated. The data is not pointing to resilience anymore. It's pointing straight at fragility.
The reality of the market right now is a steady, grinding erosion of demand. And what's worse, you've got these major policies pulling in opposite directions. You've got tariffs trying to slow things down, and then the talk of rate cuts trying to speed things up. That's not a recipe for stability, my friends. That is a recipe for pure volatility. And you can bet the Fed sees this. That is exactly why they're suddenly talking about cutting rates. And all of this leaves us with the one question that really matters, the one that you won't see in the headlines. If the foundation is already this fragile, if we're already seeing these cracks, what in the world happens when the next big economic shock hits? Because you know it's coming. And that's the uncomfortable truth we all need to be thinking about. Look, if you want more of this kind of hype-free analysis that actually gives you the real story behind the numbers, do us a favor. Hit that like button for this explainer and make sure you're subscribed to the WtT channel. We'll see you for the next one.